Friends, in this video for I Thought Wealth, I am going to talk to you on the topic, the return of the FIIs. We had almost written off the possibility. We thought the FIIs would continue to sell throughout the year. Such was the consistency of FII selling right through this year. For 6 months, every day you saw FII selling. The DIIs on the other side tried to support the markets. Of course, retail investors have been the backbone of this market and held it together through the first half of this year. Just when we thought the FIIs would not invest in India for quite some time to come, they have turned buyers in the last 10 days, and with every passing day, it looks like they are becoming more aggressive. What is more interesting is where they are becoming more aggressive, and that is the story of this market. A few days back, you would have read an article in one of the financial dailies showing how FIIs have raised their stakes in public sector undertakings during the last quarter. And in that, you had a long list of names. Look at the stock price movement and deliveries in some of the important PSUs within the index, and you will see that this trend seems to be continuing. When we thought that if FIIs come, they would still buy only the old favorites, it is the DIIs who are supporting the old favorites, the fallen heroes of the last bull market. The FIIs seem to be having a mind of their own, buying a new set of stocks and clearly steering away from ideas which are tiring. So there is a lot of freshness in what they are buying, and they are buying stocks which are out of favor, so they are not showing fear of immediate performance, and they are probably willing to wait with what they are buying. This is in stark contrast to what the DIIs are doing, which is mainly shoring up their fallen NAVs and trying to maintain flows and ensure that their performance is good enough so that the SIPs don't stop and they still continue to get inflows. This is a rather odd situation because one would have expected that domestic money would show more conviction in the parts of the economy where there is value, while foreign money would be more circumspect and cautious. The situation is actually exactly the opposite today, and we are probably going to see this trend get even stronger as FIIs bet on value, where the markets are ignoring companies and go contrarian, while domestic investors, especially the institutional ones, are going to stick to those companies which they already own and which have performed well for them in the past. Time will tell who is right, but the reversal of roles between the FIIs, the DIIs is very, very interesting, not just in who is a buyer and who is a seller, but in what one set of people are buying and what the other set of people are doing. That contrast is very, very interesting, and only time will tell who is smarter among the two. Thank you for watching this video.